Assalamualaikum and hello everyone. My name is Muhammad Shafirul Ashraf bin Azman. My number entry is 285057. Today I want to present about topic 6, the economic crisis and its impact on the Malaysian economy. In generally, the Malaysian economy has been affected by crises in the past, but this one is unlike any that the country has faced in the last decade. This is because the current crisis was caused by external factors. It necessitates a total rethinking of the country growth plan. The 1997 crisis, for example, caused both temporary measures such as capital control and fundamental change, such as banking and financial system restructuring. But the current crisis will require new ways of thinking about how Malaysia should reposition itself as the crisis challenge the country growth strategy assumptions. Next, did you know many factors of the economic crisis? Firstly, significantly associated with the risk in the level of depression and anxiety system of the affected employees. My explanation is employees at risk for income insecurity and poverty, employees working in the private sector, those with lower income, bank loan, and employees who experience stock losses and company profit reductions. Secondly, due to high debt, household debt in Malaysia alone is among the highest in Asia. If debt continues to get out of control due to layoff and inability to repay bank loans, it will further accelerate the economic crisis, especially after the expiry of the moratorium on bank loan. And I think the third factor is declining imports of luxury goods as domestic demand slow. The high import content of Malaysian manufacturers exports, especially of capital and intermediate goods, goes a long way in explaining the subsequent risk in import at the time. Meanwhile, export rose as well, especially in the resources-based sectors, and display and continue uptrend in ringgit terms. Next, the problem of economic crisis, which lie inflation, trade deficit, economic inequity, and hiring foreign workers. Firstly, inflation. Inflation is the rate of increase in price over a given period of time. Inflation is typically a broad measure such as the overall increase in price of the increase in the cost of living in a country. Second, trade deficit. Trade deficits occur when the value of the country import exceeds the value of its exports, with imports and export referring both to goods or physical products and service. In simple terms, a trade deficit means a country is buying more goods and service than it is selling. So, we move to the next problem is economic inequality. Economic inequality is the unequal distribution of income and opportunity between different groups in society. It is a concern in almost all countries around the world, especially Malaysia, and often people are trapped in poverty with little change to climb up the social ladder. Finally, hiring foreign workers. That means hiring international workers could be a cost-efficient and witty practice. The process of diversifying your company and rushing in the global market has significant disadvantage as well. It will increase local unemployment. Next, we move to the effect economic crisis and its impact on the Malaysian economy. 1. Unemployment. Unemployment will grow as economic output decrease. This is because some business will fail, causing employees to lose their jobs. To save expenses, business will lay off employees. Firm will then reduce their employment of new employees. 2. Fall in income, which means shorter working weeks. Firm will also try to reduce costs by keeping wages low. Some workers, especially temporary workers without contract, may see wage cuts. This was a key feature of the 2008 draft recession, also aggravated by rising cost of living. In 2020, at least cost-push inflation will be slow. 3. Is risk in poverty. Government will see a fall in tax revenue because of a recession. Firms make less profit. Therefore, the government receives lower corporation tax, then workers receive lower income. Therefore, government receives a lower income tax and lower house price and fewer housing transactions, lead to lower stamp duty revenue. Lower expenditure leading to lower VAT payments. 4. Higher government borrowing, which is less the tax revenue. A recession led to lower investment and therefore can damage the long-term productive capacity of the economy. If the recession is short, this lost output may be quite limited. Economy can bounce back, but in a prolonged recession, this low output becomes greater of business. Firm will see a fall in demand and lower profit. Some firms may start to make a loss and go bankrupt. This may be due to fundamental inefficiency, but also firms may go out of business purely because of the political factor and inability to borrow sufficient funds to see the end of the recession. A recession will hit some firms more than others. In the last topic is the ways to solve this issue. First, you need to expanding fiscal policy. Is the government move to the tackle employment or economic recession by increasing government spending and lowering taxes. Among the fiscal policy tools used is that the government increase spending, so aggregate demand and aggregate spend, and there is an excess of aggregate demand at the original price. Second, you should expansionary monetary policy, means the central bank to overcome employment or economic recession by increasing the supply of money in the economy so that the interest rate in the economy declines. Central banks are increasing the supply of money in the economy so that interest rates decrease and borrowing costs decrease. Household and firm increase lending. 3. You should reduce the taxes. The government reduced the limited taxes of local investors and exempts taxes on foreign direct investment as well as create free trade zones. This will encourage an influx of foreign direct investment and domestic investment so that firms increase investment and increase production. Next, you should establishment of college, universities and skill training centers. The government reduced the limited taxes of local investor and exempt tax on foreign, create free trade zone. This will encourage an influx of foreign direct investment and domestic investment. So the firm increase investment and increase production. So the demand for labor increase and employment increase. Eventually job opportunities increase and employment decrease. In the last ways is government provides subsidies to local firms. The government provides subsidies to local firms conducting research and development and exempt taxes to foreign firms investing in research and development activities. This is to encourage the influx of foreign direct investment and domestic investment so that the firm will increase the speed. The nation's spread increase and the country's revenue increase so the economic growth is more rapid. In my conclusion is there are many lessons that can be learned from Malaysia experience with the crisis. It is clear that besides the impact of the crisis on the economy, the various government policy response also have equally significant effect on the economy. It is very important that this is understood and taken into account when formulating policies in the future. Like the economic crisis in the mid-1980s, through which the government learned the importance of maintaining good microeconomic management, this current episode holds many lessons, albeit of a different nature for the government. Above all, the crisis has shown that a measure of coherence and consistency in policy is making must always be maintained.